Today we shall be beginning with the basics of journal entries. There are two aspects. It is a dual aspect concept. Okay, there are two aspects. Dual aspect. One is the debit and one is the credit. First, I'll be showing you the very base of passing journal entries. We need to first understand what is debit and credit and the application of debit and credit. Now, debit always comes into place whenever there is ownership. Okay, whenever something is owned, some asset is owned, and credit comes into place when something is loaned or there is a loan taken or a liability or some kind of payment which is to be made by us, to be made by the business. The first concept under debit is asset. So if you take any asset, for example, let us take a table, chair, furniture, air conditioner, etc., which are there in a office. Okay, any furniture which is there in an office is owned by the office, is owned by the business. So ownership is there, and anything which is owned has to be debited. So anything which is owned has to be debited. So asset, if it is coming into the business, you will debit that asset. If asset is coming into the business, you will debit the asset. Okay, for example, cash is paid by an outsider to the business, we will debit cash. If inventory is coming into the business, we will debit inventory. So this is the way we will treat the assets. Similarly, when the asset increases, we will debit the asset. When the asset decreases, we will do the reverse. We will credit the asset. Okay, whenever asset increases, we are debiting the asset, but when asset decreases, we will credit the asset. That means the asset value is coming down in our books. If the asset value goes up, then we will debit. If the asset value comes down, we will credit. This is the basic logic. Let us now come to the treatment of liabilities within the business. Anything which is a loan for us has to be credited. Any liability which is coming into the business has to be credited. So liability is something which is like an obligation, and when it comes inside, we will credit the liability. We will credit. Liability increased, you will credit, and liability decreases, you will debit the liability, just the reverse of the asset. So these are the four instances which are fundamental to your understanding of the journal entries. Okay. After this, we will also have to do two more concepts. One is of expenses. Expense is something which is paid. Okay, we incur a lot of expenses in our day-to-day business. Okay, for example, we incur salary expense, rent expense, office maintenance charges. We have to pay electricity bills. We have to pay any other expense like interest, etc. These are all expenses which are occurring to the business as a result of some benefits enjoyed by the business. For example, the salary is paid to staff for their services rendered. So the business is owning the services of the staff members, because of which they have incurred the expense of salary. They own the right to the services of the staff members. That again is a case where there is a ownership or right involved. So you will have to again debit the expenses. This is the concept behind debiting the expenses. Let me show you the way we will treat income. Income is, of course, income is the reward which is earned by the business. Now income is a benefit which has come to the business. Okay, it is the business which is earning the income, but this income is not to be retained by the business. It has to be passed on to the owner. Income has to be ultimately passed on to the owners or the owner, because the owner has given the funds, the owner has given the capital to do the business. Therefore, whatever income is earned by the business is not to be retained by the business itself. It has to be passed on to the owners. So therefore, there occurs, or an obligation to the business to give it back to the owner. That is the reason why it is like a loan. It is loans, therefore you have to credit the income. Okay, so these are the four concepts with regard to basic debit and credit. Here I will show you what to do in case of, I will summarize it here for you. When you have an expense increasing, you will debit the expense. If expense reduces, then you will credit the expense. Okay, and if income increases, you will credit the income, and if income decreases, you will debit the income. Okay, asset is owned, so debit. If asset reduces, credit. Expenses are rights for services, so if expenses increase, you will debit, and if expenses decrease, you will credit. Income is a liability. Okay, it is to be paid to the owner, repaid to the owner, so it is going to be credited. If the income comes down, then you will debit. If a liability is created, you will credit. It is like a loan. You will credit the liability, and if the liability reduces, you will debit the liability. These are the basic fundamental factors with regard to passing journal entry. Let me give you a few basic situations where you will need to pass the journal entry. Okay, I'll start with a simple case. Okay, first journal entry. Paid salary rupees 5,000. Paid salary rupees 5,000. Now listen carefully. Paid always means settled. Either it is paid by cash or by check. So if it is paid by cash, it is to cash account. If it is paid by check, it will be taken as bank account. Okay, so here we will consider cash. Okay, we will assume it is cash. So cash is going to come down. Cash is going to come down, and cash is an asset. Asset balance comes down. Therefore, what will you do? You will credit the asset. You will credit the asset. On the other side, okay, salary, it's an expense. So salary is an expense here, which is going to have a debit, because all expenses have to be debited. So the ultimate journal entry will be salary account debit to cash. And what is the amount? It is 5,000. And you also have to pass the narration. You have to write the narration, which will start like this: being salary paid. Being salary paid. Let us come to the second example. Rent paid rupees 40,000. Rent paid rupees 40,000. Now rent paid is an expense. Rent is an expense. When you incur an expense, you will have to debit. You will have to debit. So rent has to be debited. Paid refers to settlement. So we have paid by cash. Cash is coming down. Asset is coming down. If asset comes down, you will credit the asset. So what you will do is you will say rent account debit to cash 40,000, and under narration, being rent paid. Okay, this is the journal entry. Let's take the next entry. Electricity bill paid rupees 20,000. Electricity bill paid rupees 20,000. Electricity expense is an expense. It is an expense. All expenses when incurred have to be debited. Okay. Paid refers to cash. payment or check payment, cash is reducing in your business. Cash is an asset which is coming down. Therefore, you will have to credit the asset. So you will say electricity bill account debit to cash account and amount is 20,000. And under narration you will say being electricity bill paid. Now let us talk about when you have purchase of goods by the business. Whenever you have purchase of goods, now purchase is whenever you deal, the business deals with goods, okay, on sale of goods. On day-to-day basis, it will transact in purchase of goods. So let us take one instance in that goods purchased for rupees 15,000 in cash. Goods purchased for 15,000 in cash. Now purchases is like any other expense. Okay, you have to know that first of all, purchases is like any other expense. You will have to take it as an expense which is going to be debited. Okay, and cash paid means asset comes down. You will credit the asset. Okay, now the journal entry will be purchase account debit. Expense that purchase belongs to is purchases account. Purchase account debit to cash. Cash purchase has happened, so you will credit cash. 15,000 will be the amount. And under narration, you will say being goods purchased. Let's come to the next situation. Goods purchased on credit. Goods purchased on credit rupees 40,000. Now purchased on credit means we have been buying regularly from our supplier. So because of the heavy volume that we provide for his business, he or she provides us with a credit period. Okay, they give us a benefit that okay, you buy the goods now, you settle the bill after 1 month or 2 months, as the case may be. Okay, so in this case, immediately the amount need not be made. Okay, amount need not be paid out, but it has to be transferred to an account which is a liability for us. We have to settle that in the short run. Okay, so goods purchased as usual, it is an expense which has to be debited. On credit means there is an account which is called creditor for this. Okay, whenever we buy goods or services from a supplier, okay, and we don't settle that, we buy it on credit. That means we will take it to an account called creditor. It is a liability, it is a short-term liability. So creditor is going to increase, it is a credit balance, it is a liability. We have to settle that liability in the short run. So you will credit this account. And the journal entry is as usual purchases account debit to, instead of settling by cash, you will transfer it to an account called creditors account. The full amount will go there, 40,000. And narration being goods purchased on credit. We saw when we need to debit assets and liabilities and when we need to credit assets and liabilities in the basic lecture. Now I'll show you some basic examples, further examples. Purchased goods for cash rupees 10,000. Now whenever we have a business, okay, and we incur purchase of goods, we purchase goods, that is always considered as an expense. It is considered as an expense. So whenever there is a purchase of goods, okay, we will consider that as an expense. Okay, this is an expense from the business point of view, and all expenses have to be debited. All expenses have to be debited. And when there is a payment by cash, cash is coming down. Cash balance is coming down. Cash is an asset and asset balance comes down. What do we do when the asset balance comes down? We will credit the asset. Let us pass the journal entry. Now the format for a journal entry is as follows: date, particulars, okay, and then we have the ledger folio, okay, the reference of the ledger account, and then we have debit, and then we have credit. Okay, this is the format of a journal. Okay, here we will pass the entry as follows. Okay, so we will debit purchase account debit to cash account, and the amount will be 10,000. And what do we do next? We will write the narration within the bracket. Okay, so it will always start with being goods purchased for cash. Okay, this is the journal entry in the case of the problem given. Purchased goods on credit. Now, what do you mean by credit? Credit means when we have good terms with the supplier, okay, we will be in a position to ask them for a benefit with regard to payment. We will purchase goods from them, but we will not need to make immediate payment. We will get permission from them to pay after a certain period is over. So that is called purchase on credit basis. Okay, immediately we will not settle, but we will settle it at a future date, say 1 month or 2 months afterwards. Okay, so this is going to be a liability or an obligation in our books till the time we settle it. Okay, this is taken to an account called creditors account. Okay, it is a liability. Creditors is a liability. So liability goes up. We have not settled the amount means we have to settle it at a future date. So our liability is going to increase. Our creditors is going to increase. Liability increases, you will credit the liability. Goods being purchased means we have to increase the expense. Purchases is increasing. Expense is increasing. So you will debit the expense. So what is the journal entry in this case? You will debit purchase. Purchase account debit to creditors account. Creditors is a liability. We will credit the creditors and amount is 25,000. And let me also explain to you about debtors and creditors. Suppose we have two people, X and Y. Okay, X sold goods to Y. X sold goods to Y. Okay, if X sells goods to Y, X is the seller. X is the seller and Y is the purchaser. X is the seller and Y is the purchaser. So Y owes money to X. Y owes to X money. So from the standpoint of sale, X is called the creditor. Okay, and Y is the debtor. The debtor purchases goods from the creditor and he has to pay money. So creditor is the party to whom money amount is payable. Amount is payable for the goods or services purchased or rendered respectively. And debtor is the person or the party from whom amount is to be received for the goods and services. Have you understood this clearly? So the entry is also done, purchase account debit to creditors account, and you will write narration being goods purchased on credit. Let me give you one more example. Sold goods for cash rupees 14,000. Sold goods for cash. So business has sold goods. Business has sold goods. So sale of goods means we have got an income. Okay, sales is an income. Income increases. Okay, sales increases. If income increases, you will credit the income account. And cash is coming in. If you sell for cash, it means you have immediately got the cash for the sale. So cash balance increases, which is an asset. Asset is getting increased. If asset is getting increased, you will debit the asset. You will debit the asset. So the journal entry will be cash account debit to sales. Cash account debit to sales, and the amount is 14,000. Let me do one more example. Sold goods for credit rupees 45,000. Sold goods means we have earned an income. Okay, sales increases, income increases, so you will credit the income. And credit sale means, in the earlier example, if X sold goods to Y, then from X's angle, X is selling the goods on credit. So he is supposed to receive the money later. So this money becomes an asset for X. So if you say X and Y sold to Y, okay, sold goods to Y, Y has not paid money, but Y is going to pay money after 1 month, say. So as of now, this particular income which I've sold, which I've made, okay, as X or the business, I'll not receive the money for that, but I will receive the money after 1 month. So it is going to be a debtor for me. Debtor is an asset which is going to be received. Money is going to be received from this at a future date. So asset goes up, you will debit the asset. So what is the journal entry? It is going to be debtors account debit to sales, and amount is 45,000. This debtor will be shown on the asset side of the balance sheet. And narration is being goods sold on credit. Being goods sold on credit. Furniture purchased for cash rupees 70,000. Now tell me one thing. If I am a company which is buying and selling goods, okay, say I am in the business of selling footwear, and I purchase a furniture for my office or my shop, is it part of purchases or is it something else? This will not be part of purchases, it will not be part of expense. This is a capital asset, it is a long term asset, it's a fixed asset. So when you purchase furniture, when you purchase building, when you purchase office equipment, when you purchase machinery, etc., when nothing else is mentioned, if they only mention furniture, machinery, etc., you will assume that it is a fixed asset for the business. But if I am in the business of buying and selling furniture, then this furniture becomes my inventory, and in that case, it is part of my purchases and sales. But in a normal scenario, when they say furniture purchase for cash, you always have to assume that it is going to be a fixed asset. This is just a one-off purchase for the purpose of ourselves, for our own use, not for selling. So this is an asset. Asset is increasing, so you will debit the asset. And I've paid cash for that, so cash comes down. Cash is also an asset. One asset goes up and another asset comes down. So whichever asset comes down, you will credit that. So what is the journal entry? Entry is going to be furniture account debit to cash. Being furniture purchased for cash. Let me give you one more example. Loan taken. Loan taken for rupees 1 lakh. Loan is a obligation. It is an obligation. It is whenever we need money or finance or funding, we will go to a bank or any other party, external party, and we'll borrow. Sometimes we'll borrow even from the owner. The business will borrow from the owner. In all these situations, an obligation is created to repay this amount back to the person from whom we took the money. So this is a liability which is going up. Therefore, you will credit the liability. Okay, and cash is coming in to the business. Asset is coming in. But it is not our money, but we are getting money. For the time being, money is coming in. So debit the asset. Okay, so you will say cash account debit to bank loan. If it is a loan from a bank, it will be bank loan. And narration will be being loan taken from bank. Next example. Payment of bank loan. Rupees 35,000. This means we have repaid the bank to the extent of 35,000. Payment means cash comes down, asset comes down, credit the asset. And when you settle the bank loan, to the extent you settle it, your liability comes down. So you don't have to repay anymore this 35,000. You have repaid 35,000. So you have to debit the liability. Liability comes down, you will debit the liability. What will you say? Bank loan account debit. Bank loan account debit to cash. Cash goes out, loan comes down. Being loan paid. This is the narration. Next entry. Debtors paid rupees 2,000. Debtor paid means he brought in money. He settled his payment. Whatever money he is owing to us, a part of it he has settled. Okay, so debtor balance will automatically come down. He is no longer going to be a debtor to the extent of 2,000. So asset value comes down by 2,000. So you will credit the asset. Paid means cash is getting increased in the business. So this asset is increasing. So you will debit this asset. So you will say cash account debit, cash account debit to debtor. That means the debtor is settling us to the extent of 2000. So while on the one hand cash comes in, on the other hand debtor comes down. Cash account debit to. So credit the debtors. Amount is 2000. Next is amount. I'm doing a variety from all sorts of possibilities. Amount paid to creditors 17,000. Amount paid to creditors means we have settled an amount which is due to the supplier. So our cash is going to come down. Asset is going to come down, which means you will credit the asset. And creditors balance once you pay will come down. Now liability will come down. So you will debit the liability. So creditors account debit to cash account 17,000. Next, rent paid 45,000. Now rent is an expense. Okay, expense is increasing. So whenever you incur expense or it increases, you have to debit. Payment is by cash. Cash comes down. Asset comes down. Whenever asset comes down, you will credit the asset. Rent account debit to cash. Similarly, one more. Salary paid rupees 18,000. Again, salary is an expense. Expense increases, so debit the expense. Payment means by cash. Cash comes down. Asset comes down, so credit the asset. Salary account debit to cash 18,000. So we have seen from a broad range of types of transactions, we have seen samples from all these areas. I want you to practice all the questions in the illustrations and exercise in your ICI module so that you become more like an expert in the basics of accounting. And this is going to go a long way in helping you in your journey towards becoming a professional.